You're watching Personal Finance with Coach Kelvin. Let's get into the video. Hey guys, Coach Kelvin here, and today I'm going to talk to you about how to find information on the ASX website. So the ASX website is basically the Australian Stock Exchange or the Securities Exchange, and it shows all of the holdings that you can potentially purchase on the ASX. There are lots and lots of companies, and you can just search up which ones you want. So I'm going to show you what information you can find on the particular holding you're looking up. I'll use an example of a share I personally own, the Vanguard Australian 300 index, so VAS. I'll give you an example of that, and then I'll show you how to find announcements and stuff like that as well. So this can be a really good tool if you want to find out more information on a company before you actually go to purchase it yourself, or if there's any other resources you want to look up. This is definitely one you can add to your repertoire. So let's switch over now. I'm on the ASX website. I've just searched up VAS on Google, and this is one of the links that comes up. So it's www.2.asx.com.au, and then from there you can search up whatever you want using this bar here. Okay, but let's go back. So I'm already set up with the Vanguard Australian Shares Index VAS. Now today's price, it's got down here at $94.56. Now this is actually one of the most popular things traded on the ASX at the moment. The index fund investing has obviously blown up, especially with the movement of the FI community, which is exactly what I'm involved in now, looking to reach financial independence myself. So just over here, we've got the net assets under management, which is 9.49 billion. So that is billion, not million. That's a lot of money that is managed by Vanguard Australian Index, so the VAS holding. And you can see that by people buying in, it grows the size of that fund, so the assets under management grow. Therefore, you can see that it is a well-trusted and extremely useful index fund to own. So we're going to scroll down here. It's going to show you a lot of information, and this is the information taken from the Vanguard website and then displayed on the ASX website. So we're going to have a look at everything it has to show here. So the day range, it opened and closed within these ranges, so 94.56 and 95.50. There was not a very large movement in price today, but you can see basically what the high and low for the day is, which is cool. The previous close was at $96 exactly. The average volume traded in a day is 208,000 shares. And then we've got a 52-week range, so what the lowest and the highest points in the last 52 weeks or 1 year were. So we have a low of $73.80 and a high of $97.85. So that's quite a lot of movement. You know, that's a $24 movement in 52 weeks, which is huge. But obviously we were coming out of the pandemic last year, and we've seen a massive growth in share price since that time. The shares outstanding, or which are still unpurchased, are 97 million worth, showing that there's still quite a lot of liquidity in the market. Now, the share year-to-date return is currently at 17.06%, and that is taking into account both dividends and capital appreciation. So there's obviously two ways that index funds or shares can return capital or return our money to us. The first being through dividends, so when the earnings of those companies in the holding are then returned to the shareholder through dividend payout. The second way is an appreciation in the share price, and there are two ways this could happen. A company or a listed investment company or an index fund could do a share buyback where they purchase pre-existing shares, obviously then having more assets under management split between fewer shares, therefore increasing the price. Or the holdings within the index fund or the company have increased in value, therefore so does the price of the share itself. Now we have a management fee of just 0.1%. So this sounds really low, and let me explain why it is actually really low. Now if you had a average return of say 8% and your fee was 1%, you've lost 12.5% of your profits in your fees. So by having just a 0.1% fee instead, you're only going to have a loss of $10 for every $10,000 you have invested. If that was a 1% fee, obviously that would be $100. So we're saving a lot of money by having a lower management fee. because like legendary investor Jack Bogle says, and founder of Vanguard, you get what you don't pay for with investing. Now, we have a annual dividend yield right now of 2.42%. However, historically, this has been around about 4% for VAS. Now, this number doesn't take into account franking credits, I believe. However, when you factor that in, obviously it looks a little higher. Now, a company's earnings and therefore ability to pay out last year was affected, and this is taking into account the last 12 months. But hopefully the next 12 months will be far stronger, and therefore we'll see some of that capital return to investors with a higher dividend yield. Alright, so the next dividend that's coming out will be recorded on the 4th of October 2021 and paid out on the 18th of October. And there was an announcement today, so when we go a bit lower and I show you the announcements, you'll be able to see what VAS is paying and also the other Vanguard index funds that you can purchase on the ASX. Alright, so we've got our 5-day trading volume here, which is just showing how much sort of shares have moved in and out of the market or in and out of buy and hold positions. We've got our last few dividend payouts. So October 2020 was 56 cents. The one after that in January was 43 cents. The one in April 77 cents, and the one in July 55 cents. So it's not looking too bad. Now it'll show you the weightings of the holdings within this. So we've got about 30% financials, about 19% of basic materials, 10% healthcare, and you can basically have a look at everything that's held in this. Okay, so VAS very closely matches the actual ASX 200 index. As you can see, that's pretty relatively the same. Now, there are a few discrepancies. So obviously the ASX 300 is allocating 11.5% to real estate, but VAS is doing 7.15%. So there are a few small discrepancies, but it pretty much matches it as good as you can get. There are other index funds which track a similar or a slightly smaller index, with the ASX 200 being tracked by A200 and IOZ as well. But VAS is the one I invest in, and therefore the one I'm explaining today. Now, if we have a look at our holdings, so it's 100% in stock in VAS. It doesn't hold any cash, and you can see the market cap with VAS and the category is very close at 95.72 and 96 billion. So it's pretty cool. It shows you also the countries that have exposure within this fund. So you can see that majority of the holdings are Australian companies. Now, there's obviously, through Australian companies, exposure to other markets, as there are a lot of companies in Australia that also do work outside of Australia. You know, if you're thinking about your BHPs and Afterpay and stuff like that, they've all expanded business into other countries. We're going to look at the top 10 holdings now of VAS. So these are all companies that people living in Australia would have at least heard of, and they're very common and very strong. So we've got Commonwealth Bank of Australia, CSL, BHP, Westpac, NAB Bank, ANZ Bank, Wesfarmers, Macquarie Group, which is also a banking and financials, Woolworths, which is the supermarkets, and Telstra, which is our communications and telco. So these 10 holdings, most of them would be household names that most people would have heard of, and you know, if you had them as an individual holding, most of the time you're going to have a decent return. They are very strong companies and they perform well over the long term. Historically, that doesn't mean it will in future, but historically they have. Now we come down to the VAS announcements tab. Now, if I were to click on this one, this was released today at 7:15 a.m. Estimated distribution announcement. This will open up the estimated distributions, which will be confirmed later towards the X date. So the Vanguard Australian Shares Index ETF, VAS, is going to pay 141 cents per unit, which is $1.40. So this, all of a sudden, is going to bump that dividend yield up a lot higher than the 2.42% we just saw. If we were to have an average of this $1.40 every single quarter for the next three quarters after this one, obviously that pushes our dividend yield a lot higher. But as the companies within VAS start performing better and paying out differently to the shareholders, that will increase our dividend returns. This is the highest dividend I've ever seen from VAS since I've been a holder of it, so I'm very excited by this. And you can also come and look at other holdings you may have. So if you own VHY, for example, you're getting a 159.9 cents. If you're holding VLC, 160 cents. So each of them have their own dividend amount for all the Vanguard ETFs, and they all come on one announcement sheet. You can see here all the significant dates. So ex-distribution date, you have to hold it on the 1st of October to receive your dividend later on. The holdings are recorded on the 4th of October, and then the payment will happen on the 18th. If you already have your DRP or your dividend reinvestment plan set up, then you will receive those dividends reinvested into new shares, and then on the day of the payment date, you'll log in and you'll see your new shares have been added into your brokerage account or wherever you've listed your holding identification number. So we'll head over back to this ASX website. We'll scroll down. Now most of the companies that you can look up will have a description here. So about VAS, the ETF seeks to track the return and income and capital appreciation of the S&P ASX 300 index before taking into account fund fees, expenses, and tax. The S&P ASX 300 accumulation index is a free float adjusted capitalization weighted index of approximately 300 Australian equities, representing over 90% of the value of all Australian-based companies and property trusts listed on the ASX. So just through this one purchase, you have an extremely diversified and broad fund which pretty much owns 90% of all companies available to be purchased in Australia that are listed. So that is a huge strong point for investing in such a fund, because you're looking for something that is low cost, that will compound over the long term, and that will encapsulate a lot of the growth in even the smaller cap companies as they move up through the ASX 300 index as they grow. So it is very effective as a purchase, and I think it's a strong holding for anyone to have if they're looking to have Australian exposure, especially for those living here in Australia. Now, if you look at similar to VAS, it will show you other similar performing funds, but there is no, there's no need to really have overlapping holdings unless you do want to have some split exposure between different providers. However, I don't see that as a necessity myself. Alright guys, so if you got any value from this video in looking at information given to you on the ASX website, please like, share and subscribe. Let me know if there are any other tools you like to look up. Obviously you can find information about individual companies through other platforms such as Hot Copper, small caps, etc. But in terms of your ETFs and your holdings, you can't really go past the actual provider of the ETF's website itself and also the ASX website. Alright guys, if you got any value from this, please like, share and subscribe, and I really look forward to seeing you in the next video.